for spring to arrive here, I think. It's just been weird.
Well,
It just is strange. It's rainy or cloudy. There's no other option for spring here, apparently.
yeah, we've got a pretty gloomy day here. I'm just hoping it clears up. I'm taking my son to qualifying on Saturday for the Indy 500, and he's looking forward to that.
Yeah, I was in Indy this weekend for a wedding.
Oh, yeah?
Yeah, our learning and development VP, Stacy Wider, got married this weekend.
Yeah. She lives, I think, in Sheridan, right? Like, I think, if I'm not mistaken, I think she lives in or around Sheridan, which is pretty close to where I live.
Could be. Her wedding was in Avon.
Yeah.
So up in that area. I'm not familiar with your area as much as I should be, but I was driving with the directions on the phone. How I got everywhere. Well, welcome everyone. Thanks for joining us. This is the last week in Mortgage Today. We're going to continue to let people filter in for just probably another 30 seconds or so, and then we will get going here. And then everybody always gets quiet. That happens. All right, I think we'll just go ahead and get going today. Faith Howard Mooney, VP of Member Engagement at the Mortgage Collaborative, and this is the last week in Mortgage Today. And I have a longtime friend of the Mortgage Collaborative and someone that we always love to talk with. With me today, Bryan Traylor, and Bryan is the SVP of Residential Lending at Centier Bank. Thanks for joining me.
Hey, thanks for having me. I appreciate it. Even after all these times of us talking, that you still invited me is pretty amazing.
I always love talking with you. There's always an adventure in there somewhere when that happens, and that's always greatly appreciated. Centier is just celebrated 5-year anniversary with TMC. So it was in March of 2018 that you joined us.
Yeah, I think my first event was maybe a collaborative or a conference in Chicago. Yeah, it was great.
Yep. That was shortly before I joined TMC. So that sounds about right. Well, let's get going. I'm anxious to talk with you about a couple of things that have happened in the news this past week. One of which I would just love comment from the audience on how you all are feeling about this, because it happened right after, I think it happened on Wednesday, and this show obviously recurs every Tuesday, but the FHFA rescinding the DTI LLPA. Would love to hear thoughts from everybody who's on with us in the chat about how you are feeling about that. And as those flow in, we'll recoup them a little bit later in the conversation. I'm gonna think that everybody is like super excited, but I guess I would just love to hear from the audience how you're feeling about that, and what you now don't have to do within your process to make that work. So
I know it was a welcome announcement for our crew. Our loan officers got very excited. I think there was a lot of confusion with some of the realtors not understanding exactly what was being taken away versus what was still being, or still in place. But overall, very welcome news. I kind of hoped that would be the outcome, but you never know.
Yeah, it does. I've said this before, but it does. We've had the opportunity to have Sandra Thompson with us on a number of occasions, and it does appear like people are listening, which I think is always a good thing and a welcome change from kind of what has happened sometimes in the past. So
for sure. Yeah, I'm a huge fan of Sandra Thompson. Just seems like you're able to have a conversation with her, unlike, maybe past directors.
Yeah, logical comes to mind is the word that comes to mind for me. So I think that's always good. Would love to start out by talking with you about, there was an article that I had read earlier this week, and it was about, new mortgage technology, which obviously there are a lot of really great providers out there in the technology space now. But it was the heading, of course, can be a little bit deceptive, but it was like nearly impossible for many people to integrate new technology for a wide variety of reasons. And I would just, as a community bank, I would love to get your feedback on kind of what you've seen and what you're doing and why you think, that statement is out there.
Sure. Yeah. And I think a lot of it has to do with integration. How the different softwares integrate with each other. We're to the point now where through several years of evolving our software systems and things, we've come to the conclusion that our first question with any vendor is, do you integrate with Encompass? And surprisingly, there's still people out there that don't. And that's just an immediate stop for us. We don't need to have further discussion until they're able to integrate. And especially if they say we don't, but we have a bridge. We have a third-party company that creates a bridge. Those are always a nightmare. We've had so many issues with those that essentially, if you're not integrating with our core LOS, which is Encompass, it's just we can't move forward with you. From other technology standpoints, you get there's a lot of technology out there for underwriting processes, and what we're seeing, and I hope we're not the only ones seeing it, but we're seeing over the last year that repurchase requests from Fannie, Freddie, other lenders or investors have really increased. So we're a little hesitant to put the under anything with an underwriting element to it into place, just for fear of having to buy back more loans. We've had more repurchases in the first 5 months of 4.5 months of this year than we did the last 2 years combined. So anything we can do to hedge risk, and if that means paying top dollar underwriters to do the job, that's what we're going to keep doing.
Yeah, I think that number one, you're not the only one seeing repurchases having increased. Good. I think that's like an overall statement for everybody, because we've heard it from almost everybody. There is something about when it slows down a little bit and people have more time. I think more things get looked at, and then you tend to see that trend happening.
Well, and I'm not sure about other people, but right now we've got kind of a unique culture in our bank where in the 128 years that we've been in existence, we've never had a layoff in any department of anybody. So we didn't staff up for 2020, 2021, but we also haven't laid anybody off in 2022, 2023. But because of that, when people come to me right now saying, hey, we've got this great thing that's gonna, it's gonna replace 4 full-time employees. Well, what are they gonna do now? Because I can't lay them off. So efficiency right now is not necessarily a selling point for me, because at that point I'm just going to have the software and the person in place. So it's a good challenge to have, because we definitely have staff that feels comfortable in their positions, and happy, confident staff makes for a great work environment.
Yeah, for sure. And I'm sure you're right in sync with a lot of the other community banks or depositories within network, that it's just a banking. I started in the banking industry. It's just kind of a banking mentality that, you move people around, but you don't necessarily do layoffs in the same way that others, especially large entities in our industry, do some of that. One of the other things that I think that was brought up related to technology was just the fear of non-compliance, of things not being compliant how they needed to be, but also the fear of adoption. It's like you go through this process of implementing a new technology, and then does your staff adopt it or not? And now you're paying for it. I think that was one of the other things that came up as well, which I'm sure is on everybody's mind when they're spending money. And get out of it.
If we implement a technology, it's generally because we've found that it will be of benefit. We've either tested it or done enough kicking of the tires to know that it's going to be a benefit. And adoption isn't an option. I guess. We mandate it.
Yeah.
So we don't have adoption problems, but also I think because we have never given the staff an option, hey, this product is here, use it if you'd like. Because we've never taken that stance,
Oh,
I don't think it occurs to a lot of them not to use it. Like, it's okay, this is what we're doing now. This is the direction we're going. This is part of our process. So um,
that's
yeah,
great.
and that's across the board with LOs, with our operations staff, the whole department.
Yeah, that's phenomenal that you have that. Um, Next, let's talk about another hot topic it seems like it's always a hot topic in the industry, whether business is slower or whether business is booming, is LO compensation. It seems like no matter what, we're an industry of the extremes. We're hardly ever just like nice and comfy in the middle of things. But announced this week, or I saw it this week, that some of the trade groups, MBA being one of them, is lobbying for the CFPB to permit loan originators to agree to lenders reduce compensation to compete on price. As a banking entity, how do you feel about that?
I get asked a lot by loan officers. It's amazing how many of them don't realize that we can't do that. But they ask, "Oh, can I cut my commission to give them this deal? I really want to land this deal." Like, no, we can do a pricing exception, but unfortunately, the bank has to pay the whole thing. You're not going to contribute to it.
Right.
So I can see the up and down on this. I could see where it's not, for a loan officer to have skin in the game, to know that if they make this deal, that they're going to lose part of their commission. I think it gives them more ownership of the deal as a whole. It might help them fight for that extra eighth in rate. And if it truly can't happen, then some commission's better than no commission. So they'll cut their commission to try to land that deal. But right now, with margins as thin as they are, wow, I can't imagine we would approve. I mean, we're about as skinny on margin as we can get at the moment, and justify it. Now, there's others that are going skinnier, but we're not in the business to race to the bottom.
Yeah. Yeah. I think the thought process behind that was smaller lenders would be able to compete more effectively on compensation with some of the individuals in the industry that you just know by what you're hearing out there that they are not making any money on specific transactions. I mean, so I think
Yeah.
that was kind of the thought process. They also would like to see a change related to varying compensation on different loan types or products. And so I know that, there's some people, we have people in network that have the ability, because they have different channels to do different
Mhm.
compensation structures. But how do you feel about different loan types and different products? Does that make a difference to you as a bank?
It does. You get your bond loans that you're kind of capped at what you can bring in. It's almost impossible to make any money on those. You're essentially you're doing it as a service to the community, and that's about it. So if we were able to reduce commissions on those to where we could potentially make some money, it might, it'd be a benefit to the bank, but it'd also be a benefit to the community, by having more of an appetite for that loan.
Yeah, agree with that. Agree with that. That's a great example of where that would maybe help everybody and get more people into homes as well. This week, this wasn't a surprise to me, interested in understanding if it was a surprise to you with all the things that have been going on related to banking entities. I mean, banks have been in the news. The FDIC proposed a special assessment to replenish the deposit insurance fund. There are two things that I saw when that whole thing, because obviously I've been through many cycles at this point, happen. It's like, okay, there's going to be a fee somewhere, and there are going to be further restrictions somewhere. So I just kind of, when I saw this, looked at it as, oh, there's the first thing that happened. What do you think about that?
I think we all saw something coming. We didn't know what it would look like. I think this might be the first step into raising the FDIC insurance amount too. If they can, yeah, I think might be something to that. But we wouldn't be subjected to it. I think it's over 5 billion in uninsured deposits, and then everything above that would be subjected to that 8. So wouldn't impact us yet. One day it would, but I think it's not only a way for them to replenish those insurance funds, but also a way to deter banks from possibly making some of the riskier decisions with the deposits that they do have. A little bit of a deterrent to try to keep as many deposits in insured funds as possible.
Yeah, agree. So 5 billion, that hits larger bank versus smaller community bank, because it was insured deposits greater than 5 billion. So up to 5 billion, nothing imposed. Over 5 billion imposed, applied in the first quarter of 2024. So this upcoming year.
Did I read that right? Where it was 5 billion in uninsured, or is it total deposits?
Yeah, it's
okay.
uninsured. Yeah. Yep, uninsured deposits greater than 5 billion is the threshold. Yeah. And then due at the end of Q2, lasting for 8 quarters. So there is a time frame on it. It's not not a forever thing. You think it will remain a forever thing?
I mean, they call it a levy. It's a tax. Being involved in some low-level government, low level as in small, not that we're low, like most government, but being involved in low-level government, I know that once a fee is introduced or a new tax is introduced, even if there's a sunset clause, they will typically find a way to continue it or call it something else. But taxes just don't normally go down, and that's what this would be, is a tax on doing business.
Yeah, good point. I didn't look at it that way, but that is a very good perspective to have on that it is always harder to get rid of things once they have been implemented. In the news, renters are always in the news these days. It seems like there's a big focus on them, of course, because those are people that we would love to see in homes. A statement was made, home ownership is hopeless. And there are different ways that people would love to be spending their money. People are looking at the analysis of repair, maintenance, property taxes, everything that goes with owning a home versus other freedoms. I would just love to, I'm not a street level person. I have people reporting into me that are on the street talking with people that want to purchase homes. It seems like not what I would have thought that renters would be thinking about, especially with the high cost of rent. So share with us what you think about that.
Well, rents are up, but so are home prices, so are interest rates, so are prices on everything. With inflation being a little bit out of control, I mean, it's starting to come down a little bit, but not at the rate they want to see it. But I could totally understand a basic, renter's, theory that, is something that's outside of my grasp, and it may be at this exact moment. But I think what's so frustrating, and it's this barrier that all of us in the industry struggle to get around, is it's a lot of misunderstanding or lack of education from the consumers on how to become a homeowner. What it really takes to be a homeowner. What are the guidelines other than what you hear sitting around the Thanksgiving table from your uncle who was in the mortgage business 15 years ago? The struggle is, how do you get the message to those folks when they've got it in their mind, this doesn't apply to me. We've got a homeowners education seminar. they immediately think, well, I can't buy a house, so I'm not going to go spend my Saturday afternoon in a 2 hour long homeowners seminar. You put out these educational videos, you can't make them watch them. So it's one of those things. How do you get in front of that customer that doesn't know they could be a customer? They don't take the initiative or time to look into it because they've heard things and they just assume that they're out of the market.
Yeah. It was interesting in reading this because of the statement that was made is that they prefer debt-free, comfortable retirement and owning a car directly, versus maybe a higher quality of life and or financial freedom, which homeownership, is a wealth builder for
Right.
most families, right? So I just thought that was just rather unusual statement, but I think you hit it on the head that if people don't think they are in a pool that applies to them, maybe they don't hear the message.
Well, and we've got, we have some graphs and things. I know everybody has them that shows the difference in family wealth for homeowners versus renters. It's just astounding the difference. And it may be that just home ownership is that first decision that helps you get the ball rolling towards building wealth. But for any renter, if you can get in front of them and show them, hey, look, this is you in 5 years if you keep renting. This is you in 5 years if you buy a house. What position do you want to be in? And the cost is going to be about the same. You can sway that customer, but again, you can do those one at a time. But how do you get in front of that audience in mass and deliver that message in a way that they want to listen?
I think, in thinking back, but, my background, I didn't have any of that. And, I was in the 15, 16, 20% interest range when I was in my younger years. So didn't have that. I feel like it's almost like it goes back to before someone is even renting. So that whole financial, knowledge when you're in high school or in college even, I think could really maybe be a place that if it was more widely broadcast at those ages, that people just come into it knowing, what happens when you rent and what happens when you own a home.
That's funny. My 12-year-old said, Dad, why don't they teach you how to file taxes in school? I'm like, it's amazing. You're 12 years old and you figured out the school system should be teaching some of these skills, and they haven't figured it out yet.
Yeah, it's like, I don't know. I guess I think I had a really responsible kid, so I didn't have to worry about it. But it's like, you would think that some of those life lessons, if learned sooner, would just help everybody in that situation. So we're going to start lobbying now for high schools and junior highs to do financial awareness in what you're doing. But I do think that that's a good idea. In the news this week also was HUD proposing changes to expand housing opportunities for individuals with criminal records. And you hardly ever see anything about a topic like that. So that's, of course, where it caught my eye, or why it caught my eye. They're trying to prevent unjust denials of housing just because of that. And I just wondered whether you had, run into any of these types of situations and kind of what you think related to a different type of support.
We actually, it wasn't too long ago, we had a loan officer that called and said, I'm supposed to take an application tonight from a borrower at the branch after the branch is closed. But in my discussions with him, I found out that he had recently been released from prison. I'm like, oh, well, what was he in prison for? Armed robbery. I'm like, yeah, you probably want to wait until the bank is open to take that application, just to be on the safe side. But I understand what HUD is doing. You want to give everybody a second chance. I would be interested to see how that actually plays out because there's gonna be a lot of partnerships with some of the local housing agencies. And I would think from a local level, you might see some pushback if these housing agencies are assisting and trying to push some of these you know former or reformed criminals into certain areas of town. Like I could see an area kind of saying, "Hey, look, yeah, great, but everybody's what we call a NIMBY, not in my backyard." So that it's great in theory, but it'll be interesting to see how the communities themselves would approach that and would accept that.
Yeah, that's a really, really good point. It did note that they would be using community development block grants to help with reentry services, including legal support and counseling, and partnerships with PHAs and housing providers. Um,
Well,
so
I think one thing too, you at least by the time they're going to buy a house, you've probably got 2 years since they've been released from prison in order to get the employment stable. So that would help. We did have an applicant too that didn't have the 2 years of prior employment because they had been released from prison a year and a half ago. So yeah, you come across those too. But I think generally, you're going to have 2 years probably from the time they're released until you're really making an application that can close. And hopefully in that time frame, they've reestablished their credit. They've reestablished a good job. They've had some stability there to prove that, hey, I can make this payment. My past is in my past, and let's move forward.
yeah, it just goes along with the support that everybody's trying to get, appropriate people that are doing the right things into housing, which I think is always good for our environment. We did have a few comments about the DTI LLP. Thanks, Patty. Great move. DTI hit dropping was going to be hard to operationalize. I think everybody agrees with that one, that it was going to be hard to figure out how to make that work. And Sean, thanks for excited about that and the ongoing conversation around the other adjuster, which it does appear that they're still talking about that one as well.
I was happy to see here that Tony's school district is having teaching kids in 7th grade to read credit reports. That's amazing. That's awesome.
No, if everybody could just take that model and run with it, people would be prepared. People would be prepared to own a house. That's pretty cool.
I'm wondering if we can't send some of the loan officers in the industry to that 7th grade class.
Oh my goodness. Well, we probably need to be educating everyone. It's the reality. Tony says everyone is welcome. Send them her way. Last thing, gosh, we're running up on 30 minutes already. I can't find it hard to believe every week when that happens. Decline of the 5-day commute is changing kind of some of our environments. And so tell us, first of all, is your whole entire team back in the office, or are you doing a hybrid, or what are you doing for your employees?
We have about 90 employees in our department, and we have on any given day, we have about 2 in the office. So we're all remote. These are the windows in my home office behind me. So no, we're all remote, and so far it's worked out really well. No intention of going back to in the office. We've given people the opportunity, that if you'd like to go back to the office, we have space. Hey, there's plenty of space. But we haven't had anybody take us up on it. And the only 2 people that we have in the office are primarily, we've got one there to receive post-closing information from local title companies that still deliver it. and the other person is there because we have a rule against having one person there by themselves.
How about that? Well, that's great. We've differences on the banking and IMB side. We tend to see more banks, I think, back in the office, or trending more that way than typically with our non-depository members. What has happened is the average rate of office usage is about half of what it was pre-pandemic. Not surprising, I don't think, based on people being able to implement remote or hybrid work even into their process. And because of that, things like restaurants, retailers, and other people like that are moving more to maybe suburbia or where the people populations are during the day,
Right.
to kind of recapture some of that business. And I know that's true here in Minneapolis. Many of our restaurants and everything in our downtown area have shut, just because
Well,
of exactly that.
Go to downtown Indianapolis. I mean, we closed Starbucks in the middle of town. So
Wow, yeah, that's a big one. Usually they can survive almost anywhere, right?
yeah.
Well, I appreciate you. Thank you everyone for joining us, Bryan. It always is super fun to talk with you. We are doing a trip here, so I will see you in less than a month.
Yeah.
TMC is doing a trip into DC with some of our lender members to meet with the agencies. So I look forward to seeing you then.
Look forward to it.
And can't wait for that, and appreciate you doing this with us today. Thanks everybody for joining.
Thank you.